Hi everyone, welcome to the Sophron Network, the podcast where we bring together industry professionals to bring you insights that you wouldn't get anywhere else. Today we're at MN Fund together with Jeremy Kadouch, and we wanted to bring you more insights into volatility trading, algorithmic trading, going from more discretionary to building your whole library of algorithms, also capturing swings in the markets, maybe a little bit about current market conditions, and also like risk positioning, how it works with Bitcoin as a benchmark and why you wouldn't do it. And then also a little bit about OTC deals and some other like current market conditions. And we'll tap in on like various like secret alpha sources if there are any. But yeah, thank you so much for joining today. My name is Vincent Brandsma. I started Sophron to bring together as many industry professionals as possible, all who are interested in financial markets. Yeah, Arnav, maybe you can do a short intro about yourself and about Jeremy.
Yeah, absolutely. Hi, guys. Welcome back yet again to another episode of the Sophron Network. My name is Arnav Sathe. I'm the founder and head of quantitative operations for Prometheus Capital, which is a student-led investment fund out of the University of Amsterdam. Vincent and I do a lot of work together, so we also get to do fun stuff on the side like this podcast.
This is the fun stuff, yeah.
Exactly. And obviously you get to meet really cool people, such as Jeremy Kadouch. Welcome. And for a short introduction for Jeremy, he is a portfolio manager at MN Fund. We are at their offices right now. Very, very nice, by the way. An Amsterdam liquid digital asset fund where he runs the fund's trading strategies and capital deployment alongside founders Michaël van de Poppe and Esmee Sikkens. MN Fund runs a multi-pillar approach, which is algorithmic volatility trading that runs round the clock and is built to capture intraday swings even when the market is flat. A core holding in Bitcoin, Ethereum, and other blue chip assets, and off-market OTC deals sourced directly from projects and treasuries under capped vesting and strict due diligence. He brings more than 8 years in digital assets with a background spanning trading, tokenization, and product development, and has led several ventures in alternative and tokenized assets. He also built Quorum Index, an autonomous LLM-powered market intelligence platform, and founded Cask Capital, which tokenizes cask-aged spirits. That's actually really cool. He began as a retail crypto trader and has completed Yale University's financial markets course. He's based in Amsterdam, which is why we get to speak with him today. And welcome, Jeremy.
Thank you very much. Thank you for the kind and thorough introduction.
Yeah, you covered even the Yale financial course. Everything was in there.
You covered everything. And
have to do background research.
Yeah, maybe
you've
like
done it well.
where he lives and all the background.
How many kids? How much
Yeah, thank you for joining. And also, like Arnav did a very nice introduction. I wanted to basically dive straight into what we've been talking about, also at some of your talks lately, where you made a big shift, right? Like from discretionary trading to algorithmic trading. Like, can you give us a bit more info into what does MN Fund do? What do you guys stand for? Where did it originate? Like a bit of the background behind it.
Yeah, of course. So MN Fund is a multi-strategy single fund. I explicitly add the single part because the strategy runs within one fund. So before launching MN Fund, we did some research, obviously, into what the current market status quo is for the fundscape in the digital asset market. And we came to the conclusion that the majority of all the funds operating in this space are either delta neutral, which generate a standard performance of, let's say, 10 to 20% per year. Minimal drawdown risk. And on the other side of the spectrum, you had the single strategy directional funds. And those directional funds obviously struggle when there are negative market conditions. So we wanted to shape a strategy that can be sustainable and grow over time, on not being dependent on the market, on a bull market, on a bear market, on sideways choppy markets. And the only way to achieve that is by putting a multi-strategy system in place that can generate a return in every market condition.
Yeah.
Or minimize drawdown in every market condition. It goes both ways. So it's on the risk side, but also on the upside.
Okay, so it's basically like you're both profiting in like the good times when there's like a lot of upside, but then also like when the market conditions are a bit bad, you can still like generate some kind of returns, right?
Yeah, exactly. And it doesn't mean that we're not going to have red months because we have a multi-strategy. Obviously, you're still directional, but a directional hold portfolio, as an example, that would, if we would have that system in place, we would have probably be down by about 50-60% since our inception. So managing the drawdown risk is as equally important as being able to be profitable in every market condition.
That's super interesting, because also like you kind of don't want to like over allocate to like the directional positions, but you also don't want to miss out, right, on the upticks. How do you find a balance between that? Like where you sort of, or is that the secret sauce?
So, both Michael and I, we've been trading this market since, for over 8 years already. So we know how the market moves. We understand it. We know it's volatile. We're not afraid of the volatility. That's one of the things that most, especially retail investors, they head on the waters because they fear the volatility. So what we do is we consistently see how we want to structure the strategy. And you could see it as like deciding how much to allocate per bucket in our strategy. A little bit deeper about the structures. We have a 3-pillared system. We have a directional portfolio. We call it the core holding. So you can see base assets in there like BTC, ETH, blue chip projects, but it could also be tokenized gold. Stable coins also fall under the base assets portfolio. So it's very wide. The second pillar is the algorithmic trading strategy. And that's now primarily focused on capturing daily volatility of altcoins. But it could also eventually in the future be a neutral strategy.
So you guys love volatility, right?
Yeah, we love volatility. We wouldn't love it. We would probably trade equities or something. But and the third pillar is our OTC deals. And depending on where we are in the market, we change our allocation per bucket. So for the last 6 months, like around 80% of our ARM was focused on the algorithmic part. Because there was too much risk in both OTC and the core holdings.
Okay. So then is that sort of the attribution more cyclical depending on all the research that you guys do, or is it more so kind of like how much you think, like you also look at your previous performances in the portfolio and then do like your regime testing and everything like that, and then sort of enter the market depending on which one you want to choose, I guess?
Yeah, exactly. So we are almost always at a certain level in the market, but we change it. We change it continuously. So we would then basically, if we would want to decide more towards a core holding because we see conditioning and rotation, we would decrease the bucket for algorithmic and increase the bucket for the core holding. And it depends on where we are on like on a macroeconomic level, a geopolitical level. All things influence that. Like what's the Fed's going to do? Those are all very important measurements for us.
And also, because what I found interesting when I was at one of your talks, it was a sort of thing where you said we were already trading, like how many times a day? You're already manually trading a lot, right?
Yeah. Michael was, so this whole strategy is shaped, is something that Michael shaped over the last years. So he did a lot of manual trading. And also when we started the fund, like he did all the trading manually, which was crazy. It was crazy. He did like seriously a lot of trades on a monthly basis, but it's unsustainable.
You were saying like 100 a day or something, or like something
more even.
It's just like they're like clicking.
Here's the reason liquidity is so bad nowadays.
Because like maybe like from the perspective, like he was quite a famous voice and is quite a famous voice in the crypto space. Is that also where you see that like that helps a bit with the fund, or was it completely different where?
It's literally two different spectra. So obviously Michael's a KOL. He speaks a lot at events, and he has this whole like personality and added value of professionalism, which he brings to the whole market. But the fund is quite a traditional product. We have a AFM registration. We have a whole compliance manual, which we have to. So it's a different type of animal.
Yeah. And so you made the shift from like manually clicking, which I think Michaël was very happy with, that he doesn't need to sit at the laptop or like computer all day like clicking. But how did you, like, when did you decide to go fully systematic and fully based on algorithms? Because do you still trade discretionary, or is it?
So we actually from the beginning we already had the systematic trading in our mind.
Okay.
So the thing is, if you want to build something which systematically works well, you need to know it on a certain level. The strategy functions on a manual level as well. So that was the main thing. And as I said, Mike's been building the strategy for years already. So we began with a fund to see, okay, what data does he generate when trading? Like, what can we learn from that? What can we use from that source of data from trading manually and translate that to a systematic strategy?
So it wasn't like going just through sifting through data using machines and finding something that works, but you actually went from like an existing discretionary trading strategy that was working, and then you were like, how can we automate this, right?
Yeah,
if I understand.
And that was a goal from the beginning, even before we launched the fund. It was already in our mind, because we still do manual trades, but it's not the engine of the fund, because it's not sustainable. I mean, a systematic strategy runs 24/7.
Yeah. So you don't need to like worry. Do you sleep though when like the algos are up, or is it something that you have like circuit breakers in place and all those things?
Yeah, it's very advanced. So there's a whole intelligence layer that we designed over the past year, basically.
Yeah.
That determines how much risk to take and when not to take the risk.
Yeah.
So it's not something.
So it's not like like one day like the system like takes a crazy ton of risk out of like no reason.
No. It doesn't do that. And there's still like it's not fully autonomous yet. So we still make some very rational choices. But that's something we change in the configuration just like a few times a week, or maybe once a week, depending on how fast the market moves. So there's still a manual component in terms of on a strategic level, but all the execution that comes after that, that's all like 24/7 automatically.
Yeah, and I'd like to hold you to what you were just talking about really quickly, and go back to Vincent's point, which was you guys love volatility over here, right? You guys love doing it. So we wanted to ask you, like, when you're trading volatility, do you trade realized against implied? What is the positioning around it? Do you harvest range? Like all of the details. Vincent, take notes, because we need to start our own event soon.
No, but just like
these kind of things.
Yeah, sure. So we love the realized volatility of coins, of digital assets. And with realized volatility, we mean how much does a coin move on a daily basis on average. So for us, our sweet spot is in for crypto terminology, medium-sized volatility. So we keep focusing on the larger cap coins, because
so no meme coins with like crazy like
that's all out of our scope. So we don't trade that. We don't deploy anything onto these types of assets.
Not even for fun.
No, for fun. That's means personal. That's not even for fun. Like I actually. I haven't bought like meme coins in years. It's
really like 2020, 2021, right? When is it still a trend now? Do you know if there's still?
No, I think that like it had its run. It depleted like most of the liquidity out of the space.
Yeah.
Because people like meme coins and rallies. It's like a casino. So basically what happens is that a lot of people lost money, and 1% that actually made a money pull it out of crypto. That pulled a lot of liquidity out of the market. But back to the initial question. So a altcoin, it moves up and down on a daily basis. If it moves can move like 3.5%, 5%, 8%, 9%. But within that range on a daily basis, you have like if you zoom in, you have up and down movements on a daily. Like if you could look at the 4-hour candle, the 1 minute candle, and our expertise is actually capturing that volatility, harvesting it, and generating a consistent return out of it.
Yeah, and that's just something where, like, you cannot can you do it on, for example, like Bitcoin and such, or is there just not enough?
There is. I mean, we don't do it on Bitcoin because the volatility isn't that. You can run. I'm confident you can run a very profitable system on Bitcoin as well. But as I said, we have Bitcoin in our core holding. You have ETH. We actually want to have like more volatility because it's a little bit higher on the risk curve if you trade Bitcoin, obviously, but it does open up a lot of possibilities.
Yeah.
Okay. And then going back to the thing that I was holding you to with the constant development, now that you're trading such a, like, I don't even think we can call volatility an asset really, but like since you're using volatility to trade the assets that you have on your portfolio, how much like constant need for change do you need to do? Or have you guys sort of figured out that there is a bit of linearity in the behavior of the market where you can kind of capture the sizes and the optimal executions that you prefer?
Yeah, so that's a part that we still do on a minimal level manually, and especially when it comes to sizing. But everything else after that is it's like data that's been generated based on how that actual pair moves on the market. So we look at that. We look at the liquidity of the pair as well. For us, trading on a pair that has a daily volatility of, let's say, 10%, 11%, but has a 24-hour volume of 300k euro. That's we will be trading against ourselves, and that's the last thing you want to do.
I mean, you could do it if you like trading with yourself for jokes, but
it's not very strategic for fun though.
And then also when you moved from discretionary to systematic, were there big struggle points, or were like the things that you struggled with most to convert theory to a system? Is AI now helping you also with like the conversion there, or how do you? What was tough?
So what was tough? So I don't have an engineering background. I'm not a developer. I know code. I read code, so I'm comfortable with it. But building the whole stack basically wouldn't be possible without AI nowadays. Where are the biggest? I wouldn't say per se the biggest struggles. I think the biggest challenge is that you should always realize that as a trader who's not an engineer, that you're the trader and not the engineer.
And that you want to focus on building strategies, right?
Focus on building strategy, you not focus on engineering. And that's a very important distinction to make, because when you work with AI, you quickly get the hang, hey, wait, AI has all these engineering ideas, and it's like, oh, very helpful and it's beneficial, whereas AI doesn't have that trading instinct that you have as a trader. So that's
it has all the sort of capabilities to implement something, but it needs a good theory behind it, right? You cannot just ask it, hey, develop me a trading strategy. With volatility, like it's gonna make something crazy that doesn't work, right? Because that's also where your combined experience comes from, and like what you use it for, right? Like,
that's what I try to advocate to everybody who's using AI, is that you have your expertise, whatever your working area is. I mean, I'm a trader, but if you're a shoe seller at a big company, you can use AI, but you bring the knowledge to the table. It's not AI.
But was that something that kind of helped, I guess, when the entire fund moved from manual to systematic, where you guys already had done all the sort of like reverse engineering on everything that Michaël had done, and then I guess you had also probably done for a long time with the research side of things. Did that help you in building the systematic side of things very efficiently?
Yeah, definitely. It made it a lot more efficient, a lot easier, because you actually already knew the end product.
Oh, so you guys already kind of had like what you wanted
they had
to do
like
exactly.
this sort of in mind, like the theory and such, right? But isn't it difficult to go from trading instinct to signals to sort of convert it to what am I actually trading on?
Yeah, like,
because maybe you look at the market and you think, oh, like Hyperliquid or any token, the volatility is very tradable right now. But what are the sort of, where do you make that distinction with a system?
Yeah, and just to piggyback, like, because I guess with manual trading, it's a lot of like at your discretion, right? At the trader's discretion, it's you can be as trigger happy as you want. But when it comes to systematic things, you kind of have to have that discipline, right? So when you guys first went from like instinctive manual trading and manual traders and researchers into a systematic portfolio, what did you have to like sort of hold back on?
Did you start writing down everything that he was doing, for example? I know.
Well, thankfully, he has spreadsheets, so that's safe writing down a lot. But no, it's a strategy. So the thing is that research, as you said, manual trading, it takes research. You need to analyze. You need to see the charts. You need to do all the math yourself. Check the volatility and the characteristics of that specific pair. And we basically translated that everything also in a engine that does all that work. Okay. So it's not like that it's signal based on a, like an instinct level, like how we trade, but it's really 100% data driven.
So you were already sort of trading almost systematically in that sense. Yeah,
definitely. So it is quite a systematic. It was a systematic manual strategy, and we translated that directly. But that's the important part to add. It's not just a algorithm that trades. It's also an algorithm that reads and that reasons and that makes.
So have you tried? Just from our understanding, have you tried? If you have all these sheets and all this data, and you've been trading, for example, Michaël has been trading a lot. Does it work to then plug in all these trades into an AI to find patterns, or is it not something that it's good at yet in terms of reasoning?
Maybe it is now. A year back, it wasn't. And you'd still, I mean, it can spot trends. It can spot like factual stuff.
Yeah.
But a year ago, you really had to bring a lot of reasoning to it, the system yourself. So you really had to explain an AI LLM like what you're doing and what you want and how you came to these results. I think maybe now if you pull like an entire spreadsheet, a CSV file, you'd probably get a lot more concrete and valuable information.
And then you have like an AI that also, because you said it reads, it listens, and then but then the whole, like you use it to build, but then the building is a simple algorithm, right? There's no like AI to make any decisions, right?
Yeah, so the entire strategy, it doesn't have any AI integrated in it. So what I mean with it reads data, it pulls literal data from the feed, from the chart, the volatility and everything. It puts it in an algorithm, and that basically, based on math and result, it generates a execution. So we don't have any AI
that reasons
working in the strategy. We do use AI to further enhance the whole system, but that's something we use outside the whole entire algorithm.
I think that would also completely change the whole structure, right? Because then you kind of need to figure out where AI is making decisions and based on what. But I think that's not something that you kind of want.
That's like kind of bad.
But we're not there yet.
No.
We're definitely not confident enough to test AI capabilities within an executionable strategy.
Yeah.
Maybe a short question also, because you've been in the space for 8 years. What has changed? Like, what are some of the core moments that you look back on that you were like, this was so easy, or these were things that were in crypto so interesting, and now it's just completely dominated by a market maker, completely dominated by, like, it's fully out arbitraged. What are things that 8 years ago were a lot easier because you've been in the space for so long?
I think making money was a lot easier in 2017 than it is now. And that's the rule, like, the law of like sophistication in the market. It's not just cowboys operating in this space anymore.
It's very rogue, right? Very much.
Very, very woke. A lot of shady stuff going on. like random, like now, before you had like rug pulls, when a token was actually live, you already got like scanned before it went live. So you were rug pulled on a much earlier stage. Now like scammers, at least they go live with a token
so
for a few minutes or a few days or maybe sometimes a year, and then they decide to rug pull. So it's
they're like, you can exit.
some exit. Back then you invested in an ICO and you just never saw your money ever again. So
so this scammers got a lot more like they were like, okay, we've made enough money, but like now we'll give you 5 minutes to like
you still have some opportunities. So I mean, it was cowboys then. You can buy everything on DEXs, everything on centralized exchanges which weren't regulated at all.
But it's a lot
Binance,
more
which
mature
is
now, right?
It is more mature, much more mature, but for the retail investors and traders, it's also more challenging because you're trading against professionals. And back then you were just trading against each other.
But I feel like you have a lot more knowledge than, for example, like an existing market maker who just hires someone and then they start trading, no? Or is that just a different market?
No, it's the same market. Yes, I have more knowledge in probably in a broader sense and also a more specified manner. But I mean, stepping in at a big market making firm, if you start working at Wintermute, you get your whole working document in place, and there's not a lot of creative strategy that you have to implement probably. So it's really very easy, straightforward work just to start working there, and you learn as you go. But I mean, obviously the skill, the pace of developing your skills goes much faster.
But how has retail liquidity changed since you like very first started versus now? Like, does it hinder you still, or
I feel like it's a lot drier now, right? Like retail in crypto.
In 2017, the market was driven by retail. All the volume, all the trading activity came from retail,
which is where you were making the money.
Which why it was a lot easier to make profits. But now it's mostly driven by market makers, trading firms who just can generate a lot of volume. And that's also where like the big guys look at is how much volume do you actually generate, and how easy is it to enter and exit a position. So it doesn't really matter where the volume comes from, for an institutional, far less than for a retail trader.
But I assume for a fund, it's also in the directional side, it's much better, right? Because you don't want to start investing in this cowboy territory where you're like, oh, I'm going to invest in the token and the next day it's going to rug pull, or there's no liquidity. And now with all these market makers, it's become more efficient, right? But it's also good for the directional side.
Of course. It is. And also the regulatory, like the MiCA is also favorable for that, because the chances of getting rug pulled on a coin that's listed on Bitfavo or Kraken is just significantly smaller than it used to be. So from a fund perspective, who's like registered, it's quite nice to know that you're trading something and you're okay.
That it's not one day Solana or Ethereum.
It's just it suddenly drops 85% in a day. So that's
or they just run away with the money.
Run away and go to the Caymans or somewhere. I don't know.
And you also have to KYC, right? Or they need to know who's behind the project, right? And first you had this whole space where they were buying NFTs to set as their ex-profile pic. And you would buy your meme token from a Bored Ape or like some kind of anonymous player.
Anonymous teams, that was a big thing, in especially in DeFi summer. Like everyone wanted to be anonymous. And we just bought the coin because you thought, well, I mean, there's a lot of potential in it. I'll just buy it and hope to make a profit. But you had no clue who actually built the whole stuff.
And for directional, what are the sort of core pillars that are now most interesting? It's the stable coins, but like you cannot really, through your like OTC deals, you can make money on that, right? But not really on the trading. And then also, for example, the RWAs, like there's a lot happening with equities being tokenized. And we actually had a podcast now. I sat down with the guys from Super Team from Solana, where we were talking about you can now tokenize a lot of these assets, off-ramp them onto your normal like Robinhood account, and then convert it to like a real share. Is that something that you see for the directional part also taking off, or what do you think would move the needle for more adoption and that directional part to start going again?
I think that's definitely something that will push a lot more towards global adoption.
Yeah.
Still, I mean, if you look at the current status quo of the market, the whole digital asset space, if you narrow it down to crypto specifically, it's very unattractive. It doesn't have narrative at the moment. I mean, gold had its narrative due to the geopolitical tension, macroeconomic uncertainties, the AI narrative on stocks are booming with insane IPOs that are going on. So there are and now and you also have like more micro economic changes, like here in the Netherlands with the new tax ruling around the box 3, where people who own real estate are now more focused on selling their portfolio and just stepping in a real estate fund
and a meme coin.
maybe even a meme coin, just to avoid like the heavy tax risk. So there are like so many things going on at the moment, and I think the whole entire thing needs to stabilize, needs to land before we can actually go towards a more directional market. And there are a lot of things going on that makes it more positive. The Clarity Act that it's going, and war ending potentially with Iran, and maybe something with Russia and Ukraine, if just a lot more peace of mind would be helpful.
Yeah, because these kind of narratives against like the tokenized assets and sort of new ventures that come along in the finance space, where people are kind of scared to walk away from the TradFi environment. Is there something that you would say to like a retail investor, for example, or somebody who's just looking into digital assets and crypto assets? Like, how would you recommend them to approach it?
Approach it with knowledge. I think that would be
that's for everything. Like,
you don't have to approach everything with knowledge, but
listen to our podcast.
Approach it. Try to educate yourself. Don't just be afraid of the volatility or the risk and just decide not to do it.
Yeah.
You can educate yourself in tens of different ways. You can start with educating yourself on trading. There are dozens, like hundreds of books you can read from amazing authors who have trading experience.
Any examples books that helped you, or?
Trading in a Zone is one more on trading psychology psychology level. You have Super Trader from V. Tharp, which specifically that one gave me a very rational way to approach the whole trading when I did a lot of manual trading back in the days.
About like discipline and such and positioning. And,
not per se also, but the main thing that I thought was very helpful is instead of defining your profits in euro or dollar, define it in your risk. So with every risk you take, you want to make a risk multiple to be profitable in trading.
Of course.
So, and because you make that simple conversion, whereas my risk is 1R, if I get stopped out of this trade, my loss is -1. If I make a 3x of my risk in profit, I exit, I have a 3R. So you don't see anything in euro reflected. It actually has a funny psychological impact that you're more or less focused on the euro values of your trading, which lowers the emotional impact.
Because also long term, like you don't want to, if you think you're an amazing trader because you made like 20% return on your whole portfolio in one day, and you think, oh, I'm like the best trader ever, and then that was apparently huge risk, and then the next day you do it again because you think I can make 20%, and it blows up your whole portfolio. And like that.
Yeah, that's all things, because if it's a more data focused approach. So you generate your return in risk, you get more data, you get a mean R, you get a standard deviation. You have a lot of information that you actually gather, which makes it very, very rational.
That's also where a lot of funds went wrong, right? Because they say, black swan event never happens. But then if it happens and it blows up your whole fund, you're done.
Especially if you have leverage positions.
Yeah, and it's that's why also whenever people say, "Oh, this has like a 2% chance of happening, so it's risk free," or like, "Oh, it's like 1% odds of like me losing 80 or 90% of the whole fund."
Yeah,
it doesn't make sense, right?
I mean, gambling. Every profit goes hand in hand with risk.
Yeah.
That's a golden rule. You will never make a profitable trade without taking any risk.
Yeah. And how does leverage look like in the crypto space as of now versus like even 4 years ago?
100x on the fund.
We don't trade leverage at the fund, primarily because there's more than enough volatility on a coin to be able to be trade a lot without any leverage. And generate a lot of volume by just trading on a spot market. So we don't do it ourselves.
Even 2x or 3x is a lot, right?
Even that is a lot.
And it's blow up your position.
And it's unnecessary. That's the whole thing, how we view it. And there are also funds who love their like leverage trades, and some went bust because they didn't foresaw a major event like October 10th or whatever happens. I mean, if your underlying asset drops 30% in a day, which happens very regularly, and you don't have the right collateral in place, you just get liquidated.
Yeah.
But I mean, okay, so we've talked a lot about like your personal philosophy and then the fund as a whole. But then I want to go back to MN Fund for a quick question. You guys measure the fund against Bitcoin as the benchmark. Why benchmark to Bitcoin rather than dollars? And how does it feel being judged against Bitcoin?
We made the decision to measure against Bitcoin because as a fund in this space, like just ignoring the neutral funds because I don't think it applies to them, but as a directional fund in the digital asset space, if you cannot outperform Bitcoin on a like average level, then what's the true added value that you have? Because everybody can buy Bitcoin, like everybody. It's not that hard anymore.
Yeah.
So it's the most like buying Bitcoin is the least risky thing for an investor to do if he wants to get exposure to crypto.
So it's like the S&P 500 and
it's the S&P 500 of this space. So
it's like if you can't beat inflation, then maybe you shouldn't have a hedge fund.
But why not Bitcoin denominated? As in, you say the returns are X or Y, but all I want is more Bitcoin at the end of the day?
Because, I mean, there are a few funds who have that. I think it's a little bit more complicated to launch a BTC denominated fund. But for us, it was important to just start with Euro because most of the investors are still like Euro sensitive, fiat sensitive. So that was for the reason just having a Euro fund. So we have our Euro value and we benchmark it against BTC.
Yeah, because I assume there's also like quite a few investors who do want some crypto exposure, but then they only want it for like a fund and not some kind of a bit rogue model, or they don't want to pick the tokens themselves, right? Because it seems like such a crazy space. So I don't even want to try to pick a lot of tokens because I think a lot of tokens is very difficult to tell whether there's added value, and you also don't know if they're long lasting, right? That's something because you don't know like if tomorrow there's like a new thing coming out that's gonna boost, or do you see that like has a rotation been a bit stable now in terms of the top 200 tokens, or is it still going so quickly like before where
it's definitely not at the same pace as 8 years ago, because 8 years ago it was constantly changing and yet a new project just ramping up the top 100. It's like out of the blue. And now it is more saturated, but there's still some rotation going on. I mean, we had a couple rotation over the past 2 years, but that were serious like project with serious backing, good use cases. So it still happens also because you also have like a switch of the watch basically, because like a lot of OG projects are slowly just bleeding out because they can't keep up with the competition, so they slowly just drop out of the the top 100.
Yeah, that makes sense.
Yeah.
I also wanted to quickly touch upon, we were talking about tokenizing everything. I was wondering, how do you tokenize spirits, because you're focusing there? Of course, we're also today at MN Fund, so the focus is there, but we also wanted to touch very lightly upon those kind of things that you do with Cask Capital. How do you look at tokenizing spirits, and how did you come across that as a sort of business model?
It's a fun proposition, and I'll give a bit of background story. So I was mainly focused in 2020, started focusing on using NFT as the main driver to make luxury goods accessible as an investment. So I worked on several luxury watch proposition, attended a conference for it, got connected with different people. Then a close friend of mine, he actually asked, hey, can you apply this to Scotch whiskey barrels?
Okay.
And I don't have a lot of background knowledge of Scotch and whiskey, but at least not back then. But I asked him to explain the flow of a cask. So which a lot of people don't know is that a cask that has spirit maturing in it, it's actually a tax-free product, because alcohol, as it matures, evaporates. You don't know how many bottles or liter of alcohol or liquid you're going to get out of the cask after it's been maturing for 15 years. So once it gets bottled, that's when tax gets charged.
Yeah.
Because it's tax-free, it has to be stored in bonded warehouses. Which isn't a person can just walk into a bonded warehouse and say, hey, I want to buy this bottle. It doesn't work like that, because it's on the scrutiny of the tax authority.
Yeah.
So because of that physical component, which builds a certain level of security, it became very intriguing, because the valuation curve of premium spirits, it's around 8 up to 12% per year.
Okay.
So it has a very interesting growth rate.
Yeah.
I think Scotch even has been outperforming the S&P 500 for 3 decades. I think 2-3 decades already in a row.
Really? Yeah. So that's what we should buy instead of Bitcoin, instead of S&P.
No, but so
as long as you don't drink it, right?
Yeah. Well, the thing is, you need to buy something that gets drunk. I mean,
they don't drink it. Don't
drink your own money. So you have to sell it and let somebody else enjoy the bottle.
Yeah, exactly.
But that's how I came to the idea of Cask Capital. I started it with him and 2 other partners, but eventually they all left. So I'm building it myself now still, because it's very interesting. I mean, I started with Scotch. There's tequila now. I'm gonna launch with rum in a week and a half.
Oh, very nice.
So the goal is to have it started initially as a direct to consumer model, where we would buy inventory and sell it. That went successfully on a pilot, a SaaS platform, which we could use. But over the year, basically the whole strategy pivoted from a direct to consumer to more of a B2B.
So people model. Can just literally buy. Is it even fractionalized?
Yeah.
So you can buy 0.1 of this specific.
Yeah.
And then it tracks, because it must be for every cask, you must have probably a independent contract, right? Because they all depend on. Does it also go as deep, or is it just the cask level, right? Not the bottles inside, but just the...
Yes, it's on a cask level. So every cask that sits in a bonded warehouse has a statement. It has a cask number. It's stored at a specific facility, and that's all data that's basically recorded. And that's all the data also that gets put into the metadata of the token.
And that you do through working with these parties that do it, right? It's not okay.
Yeah. So currently the goal is to actually partner with reputable warehouses, independent bottlers, distilleries.
Wow. Okay.
You offer basically them a way to list their stock in a more innovative way. That puts it on the blockchain. So Cask Capital is mainly built now to become the liquidity layer to enable trading and investing in those assets.
That's really good. So you're making I mean, it's a liquid market because it's literally
it's pun intended.
But it's I mean, you're making the non-liquid market liquid, right?
Yeah, that's the narrative, and that's also where you bring added value, because as soon as you put it on the blockchain, you have these fractionalized token. It opens up secondary trading, so you can actually trade peer to peer with each other on the marketplace. But the more interesting components are features like collateralized lending, because if your underlying asset has an valuation curve of 8 to 12%, but you can borrow against a 4 to 5% interest rate, it becomes an interesting way to actually get more liquidity in your portfolio, and you can actually then use that to reinvest in other assets.
So how does it work if you, for example, sell 0.1 of it to another person? Then when does it finally get sort of, let's say, like the who gets to finally sell to the end consumer, or do you need to have like one to then convert it to a real one and then be able to sell it?
It's fractionalized. So a barrel is directly fractionalized into a collection of NFTs. So there's no in-between token sitting there.
Okay.
So that's the whole thing. So let's say I tokenize a barrel, it fractionalizes into 10 NFTs. It gets sold with storage and insurance included. For 3 years, sometimes 5 years, or sometimes even 10 years. So that's, for that time period, it's sitting at Cask Capital on the marketplace. And whatever trades happen in that time, eventually when the cash gets sold, either to another investor or to an independent bottler, that's actually when the liquidation moment comes, where all proceeds of the sale gets deposited into the smart contract. Where then
it's like a future contract almost.
In a way, I mean,
like to some extent.
To some extent, I try to simplify it with just tokenization and the marketplace. But now that you touched that point, the whole thing, end goal basically for this proposition where you could go towards is actually enabling, putting indices on chain backed by barrels, but also you can go towards futures trading, derivatives, options, because it's the underlying asset has such a known yield curve.
Yeah, true.
I mean, there's like people have commodified so many things. There's one for reindeer herding up in the Nordics. They've commodified that as an index. You can buy derivatives on reindeer herds.
Reindeer herds.
Yeah.
So for what?
Like depending on how many herds are moving in what directions, because they're in the Nordics, they need reindeers for like transport routes and all that stuff, right? So they've done that, and then in South Africa, what you were talking about with putting up tokenization or then commodification of cattle for loans.
I've heard that actually.
That's actually really cool.
Because my friends are looking into it actually, and you can buy a whole cow, like a contract on a whole cow for like 4,800 euros, and then if you can essentially choose to farm it, or you can choose to grow it out, and you can like essentially import steaks of the cow that you own in like a year or two.
Wow, that's really cool. That's really cool.
But do you think like how long do you want to do Cask Capital? Like, is it like a lifelong passion project of yours?
Oh yeah, it's definitely a lifelong passion. Keep on building it, keep on expanding it. It's a lot of fun. The possibilities are also always growing. So it's cool to see. I mean, already I've been building it for around 2.5 years. 2.5 years now. If you see how much it has progressed in that time, it's just cool to see something growing from nothing to a functional product, and even going.
I think that's also the biggest thing, right? Where eventually things are just going to get tokenized, and then you're using the blockchain for like what's behind it, and you're using the token to pay for gas fees or like Solana, for example, or whatever. And then the token is sort of, it has utility because people use it for like trading these real world assets, but then eventually you don't really need to have that many tokens on your books.
No, it's also one of the main reasons I stayed away from launching a Cask Capital token.
We cannot but invest in Jeremy.
I mean, it's an easy way to raise funds, but it's a double-edged knife.
And then you also need to
doesn't have a use case. It doesn't have functionality beyond providing access.
And people don't have like a long-term mindset, right? So they want they want profits probably straight away. And then you have to rug pull.
Yeah, that's what I was going to say. You might get lazy, or they might get. We'll have to rug pull at one point.
Oh yeah, no, but I mean, it strips away the tangibility a lot of tokens, and that's what most projects don't realize at the beginning. Getting your tokenomics in place, it's so challenging. People underestimate it. So that's.
But do you feel that at an institutional level as well? Like when you're structuring some of these deals, like over tokenization, or when somebody's bringing in too many contracts on the first seed, do you ever feel the need to tell some of these new incoming people into the market, like, guys, maybe you should calm down a little bit or control it?
Yeah. I had this conversation often during conferences. I mean, people. You always talk with people, you exchange ideas, exchange insights. If someone is building his stuff, I know it myself, you love pitching your whole proposition because you're passionate by it. And when you ask a question like, what's the actual need of your token? Like, can you build this without a token? Yeah. It's obviously not a fun question to answer, but it does trigger some realism whether it's really needed or not. I mean, if you solve a pain point without having a volatile asset, just solve the pain point.
Yeah, and it's also something where there's a very thin line in the question of what actually needs to be tokenized, right? Yeah. I feel like people who've been in the space for a long time, it's like giving an engineer AI. He starts building and he's like, it's so easy to build. And then they build so much stuff that eventually you don't even know what's relevant anymore. Yeah. And I think that's also in the crypto space where people got all of a sudden access to AI to build all these projects, but also people have been in the space for so long that they got so excited about all this building. They're like, I'm going to tokenize my grandma's furniture so that I can sell it on them. So sometimes there's you don't really need to tokenize everything. But I think for spirits or things where there's a very clear yield curve and also a very clear proposition and what you're buying, then is super useful.
Because there's something physically underlying that they can touch and feel, you know what I mean? Like maybe not everybody can access your grandma's furniture. So it's like,
that's very, very limited supply. So
that's true. It is scarce.
Have you over the years grown a nose for this sort of BS where you kind of see this over or unnecessary tokenization of assets and you're like, guys, I don't think we should do this deal?
A lot of not per se, not always tokenization specifically of a real world assets, but not everything needs to be tokenized on the blockchain. You had people, I think, tokenizing oxygen from the Alps. I mean, come on, it's you don't need to do everything. Just be creative and. You can tokenize data. That's interesting, but you don't need to.
Because also very shortly, and then we'll wrap things up. You also built Quorum Index. Is that something that you're actively working on still? And
Quorum Index was actually started as a ambitious idea to build something entirely managed by AI agents. So with the rise of OpenClaw and all these persistent memory agents. I just got that experimental drive, how good is it actually? So it started out as let's test this out. What can it do?
Because what is it exactly? It's like a LLM powered research lab or market intelligence.
It's market intelligence, market structuring. So it translate a market into readable, digestible information. I would frame it as such.
With agents that run basically every day or every week, and they gather data here and there, and
So it's an agentic system. Basically, you have an OpenClaw agent that's managing the whole infrastructure. That manages all the sub agents. And then you have an agent who reads all the macro data. You have agents who read the digital assets.
For crypto or for both?
Crypto as well.
Both.
It's basically the whole broad trading market structure that you can.
So eventually, you would like to make an LLM powered Bloomberg terminal.
That's how I summarize it in one sentence. Is Bloomberg
the Kadouch terminal?
Bloomberg for retail.
No,
that's
cool. And
that idea.
The thing is, if you can fully do it autonomously where all the agents communicate and you build the whole infrastructure. I think that would be super relevant because then also you don't need to look at it that much and you can work on MN fund.
That was like a hard demand for myself and also for my family.
Yeah, of course.
I love building stuff, so I always get ideas. Okay, let's start.
Yeah, but it's fun to do all these like side projects, right? And to also see, because I think it's really creative, valuable ideas. And even if you could sort of build it out and see like, can I learn about AI agents and how they integrate? I think that's something that's very valuable.
And that was the goal as well. And I mean, if the whole front end, even like the whole website, it's like managed now by the agents.
I mean,
that's crazy. Yeah.
But if you like, I don't know if you've given it any thought, but if you were to like make an open source version of this with like obviously your license, it would be really cool for students like all over the world to be able to access this kind of information, because we've at least had talks with the university and trying to get us Bloomberg terminals here because there's a lot of European universities, like major ones, who have them for students.
Yeah, who's paying 25K a year?
Yeah, I don't know, but
I don't know. Maybe you charge 50K a year.
Yeah, exactly.
Don't charge me. Yeah, I mean it's for retail, so.
Exactly. I mean, I feel like that would be something that's super cool.
Yeah,
if it comes
if
in
it's
a couple
something
of years,
because it's like membership based or
it's just subscription based.
Yeah.
So everything is done by the AI agent. So
that's so cool.
I just tell them I get a weekly check in. If there's something going on, I get a Telegram message from, hey, this is going off. Could you check at it? I'll dive into it. I solve it. And then it continues building. It updates all the data on the website.
That's crazy.
Like OpenClaw in the background. For you.
Yeah. So I communicate through Telegram with OpenClaw. I've iconically named it Jarvis.
Jarvis
from Iron Man from the Marvel comics. So that was my how I wanted to name.
I think that's the future, right? Eventually, where not I don't think it will eventually become fully autonomous in terms of decision making, but I feel like the amount of decision makers becomes very small, and they can have a whole army of agents, and then it's just you talking to Jarvis, and Jarvis is managing.
Yeah.
Like 20, 30, 100, 1,000 agents were researching and doing the diligence.
Yeah.
But also in other verticals, right? Like
the same for Cask Capital. I mean, it's a different system. I use their Letta. It's called Letta. It's a more secure environment to build agentic stuff on there. It has a different structure, which makes it easier to build a self-learning persistent memory stack. But that also has like 10 sub-agents working in it. It's building an entire valuation daily, like generating data, looking on auction price listing of bottles, reverse engineering the price towards a barrel, and doing all these kinds of stuff where you probably need a team of like 15 people to generate that. And now I can do it with 10 agents. So
that's why eventually you have an office just for podcasts. That's the future. You're just managing your agent on one computer and then the office is just for
a stack of mini PCs on top of each other.
Yeah, thank you so much. I don't know if you have any final questions, but
I mean, maybe any summer plans?
Summer plans. So next week I'm going for a hike trip with my brothers. I have 4 brothers, so we're going to do a boys trip to Slovenia.
4 brothers.
Yeah, we're going to hike.
Those are agents. But it's just our brothers, right?
We're flying to Ljubljana, and then we're going to do a hiking trip through the mountains a couple of days. And then for the summer, I'm going to go to the Swiss Alps. It's a fast spot for the family. We always go there every year.
Yeah,
very nice.
That's really nice.
Yeah,
I think also that you can never replace with AI.
No. You can't beat that with AI.
Thank you so much for taking your time today. It was super interesting. Also from the whole spectrum of where you started in crypto, then going to work at MN Fund, then building, tokenizing the spirits, and then finally wrapping it up with the market intelligence, Quorum Index. I think that's super interesting, the whole trajectory. Thank you so much for sharing all the insights. I feel like I became more wise doing this podcast.
Thanks. Yeah. Oh, my pleasure. Thanks for having me on the show. It was fun.
Yeah, absolutely. And to anybody who's watching or listening to the podcast.
I hope listening, not watching.
No, but I just wanted to say check out the MN Fund and like learn a lot from there, because you guys also have a podcast.
So Michael has a podcast. He launched that 18 months ago. It's called New Era Finance.
Okay.
Yeah.
Highly recommend tuning in. He has like reputable names, Raoul Paul. There's one coming with Michael Saylor.
Yeah, I saw that.
There are really amazing guests coming to the show.
Perfect.
Yeah.
So then if you ever get tired of listening to our voices and know where to go, then otherwise check out Quorum Index, check out Cask Capital, and then thank you so much, Jeremy, for your time.
Yeah.
And letting us into your offices. We'll leave with the souvenir, you know?
Yeah.
Pleasure.
I really hope that MN Fund can scale up and become like one of the best like volatility trading funds with also the directional side. I think that balance is very good. So thank you so much. We'll drop the links in the description so that people can follow the fund, can follow you, and then also connect if you're willing to accept anyone.
Very easy.
Thank you so much. So we'll be dropping also other episodes, and also feel free to check out the previous episodes that we did. And then my name is Vincent, and I was here today with Arnav, the co-host, and Jeremy Kadouch to share more insights into the crypto space, tokenization, and anything related to AI. So thank you so much for your time, and then see you guys next time.
Bye. Thank you.
All right.